So yeah, hello guys. This is the first video of Engineers Investor Club, and this. Let me first give you the brief introduction of what we actually are and what we actually do. So the brief introduction is we are the 3 to 4 people group over here, and we study a company in so depth and about like we took 2 or 3 months to study a company and further like if we feel that this company is good to us and it has a long term duration span, suppose like of 2 or 3 years span in which we should invest in company and minimum return for this company should be of 2x to 3x. We find this similar company with high revenue growth or like high perspective, or if they are doing some capex over there, so we invest in this particular company. And this video is related to one of the particular company which we are studying and which we are already invested in. And this will be give you the brief idea about how our infrastructure journey will begin from 2022 and it will end till 2025 or 26, or later on it will be further continued. But we are sure that the infrastructure journey will peak at 2025. So we are predicting it and we have a strong conviction on this. So yeah, so let's start the presentation of today. So the question is how an engineer or a common man can gain from infrastructure. So suppose you have seen that like currently I am in Surat. So there is a metro line constructing over here. But how a common man will be benefited from this construction, and like suppose a national highway is getting constructed, so how a common man will be benefited over this? Yeah, although a common man will use it, but how monetary gains he or she will be getting over here? So like yeah, and if you notify that this is the slogan of our company, preparing for better tomorrow. So yeah, uh, and let's move further. So suppose if we feel that infrastructure is going to grow in upcoming duration of time, then it is very important to know that at what CAGR, like CAGR, if someone is new in this like investment industry, let me tell you in layman language. CAGR is at what rate this company will give us a return, or CAGR is like at what rate this industry is growing, will be grow or will be growing since past couple of years. Okay. And one more question is, without a civil or mechanical engineer, suppose civil engineer is there, so he's like constructing the bridges and like getting monetary benefits. So mechanical engineering for tools and techniques, they are getting monetary benefits. But yeah, how a common man, suppose a housewife or how a students will be benefited from this. So yeah, in this whole journey, we will find out how a particular common man will get benefited from this infrastructure growth in India. Okay, so first of all, let me give you a disclaimer that we are not SEBI registered, and we are. This video is not at all recommendation that you have to buy this particular stock or you have to sell this particular stock. It is just that we are invested in this company, and this is the detailed explanation about this company, how this company performs, and what are the expectations of their like promoters, or what are the strong commentary they are passing on to us. And this is the detailed description about that company. So yeah. So in this report which was presented by Indian Brand Equity Foundation, which stated that about 33% increase has been seen in the outlays of capital investment, which is up to 10 lakh crore, which will be contribute to 3.3 percentage of a GDP in the union budget of 2023 to 2024, which is almost 33% raise. So this is a huge raise in infrastructure, like the development of infrastructure in India. So will infrastructure grow in India? So yes, definitely. This is a statistic which tells us that the infrastructure will strongly boom in the upcoming years, and this is the report of 2023 to 24, and we can see some strong numbers later on for 2024-25 purpose. Sorry, years. So yes. So this is the capex. So let me first tell you what the capex is. Suppose if a company is in a foundation stage, and suppose a company has built a strong product for that, and after that, if a company wants to expand the land utility, or if a company wants to expand its capacity, then it is called a capex. Capex means capital expenditure, in which a company will increase its manufacturing power, and it will try to fulfill the further supply and demand chain. So in FY 2018-19, we can see that there is 3 lakh crore capex amount, which will contribute to 1.6%, which will be in FY 2021, which is 4 lakh. So suppose in 2 years, we can see that there is a 33% growth, which will be just contributing 1.8% to the GDP of the India. But in the next couple of 3 years, we can see that there is an increase in 2x of, like, suppose from 4 lakh crore to is like almost 10 lakh crore, which will be contributing to 3.9% of the GDP. And if you see the year on year growth of the infrastructure growth in India, which is 12%, 21%, 34%, 35%, and which is 33%. So I can say that it is between 30 to 35%, and then I can see that it is in between 30 to 33% for next 3 to 4 years. Okay, so there is no doubt that will infrastructure grows in India. So yeah, it is definitely that infrastructure will definitely grows in India, and we just have to catch a particular thing at a particular correct time, not on the higher valuation, but at the lower valuation at cheap PE ratio. So yeah, let's move forward. So why should you know all these things? Because like a particular YouTube channel, why they will tell you about how why the infrastructure growth will be there, or why you want to look at to the future so much. So it is just that suppose in tomorrow's market, if a market opens gap down for 10% or 2 to 3% for a particular stock, then people will start at panic like the shares has been fallen so much. So if you have a strong conviction on India's economy, and as well as if you have a strong conviction on your own stocks, suppose like this stock will perform better, not today but like after 2 or 3 months or 2 or 3 years later, then if you know all these things which I have previously mentioned, like what is the growth rate of infrastructure and what is the growth rate of like the whole industry in which your stocks is performing, so like you will not be panic of this sell-offs which will happen frequently in markets, which is like almost 2 times or 3 times a year happens generally. So yeah, uh, so a useful quote which Warren Buffett says that wide diversification is only required when investor do not understand what they are doing. So suppose if an investor didn't know that in which sector he has to play or what sector rotation is happening, then he will pick all the stocks from various fields and he will mess up the portfolio, and his portfolio will contain 50 to 55 stocks, which is not at all a bad portfolio positioning. So what you can actually do is you can keep a 4 to 5 stocks of different sectors, so that it will be like you're not putting all the eggs in the same basket. Although that is not much diversification. So yeah, 3 to 4 stocks or 4 to 5 stocks is enough for a particular portfolio if you're new to the investor and if you're new to the investment field. So yeah, when I talk about myself, we have like about 7 to 8 stocks only. Okay, so if we are talking about infrastructure field, if we are talking about infrastructure field, then we can see that only 13 metro railway lines are functioning all over the India in 13 different cities. Okay, so should we invest in metro? Like suppose metro will grow in it is an infrastructure part. So should we invest in metro? So like a big no. Why the big no is that is in the next slide. There is a 2.7 lakh crore budget for National Highway Authority also. So should we invest in highway, like the company which is building roads or which is building national highway parts or something like that? Should we invest in highway? That is also a big no. What is the reason of for this two? I am telling not to invest in both of this because see, if we know that a car making company, suppose a particular company is making cars and he has produced or he has shown a good numbers in this quarter. Suppose a car sale has been boomed by 30 to 35% in the particular quarter. It is definitely that the other OEMs or other like tires of a car or the headlights of a car, which is also manufactured units by other industry, they are also going to show a bumper result on that duration over time. Okay, so I'm telling you that if a car or if a car sale is going higher, it is definitely that the lights or the particular headlights or particular wipers by the company which is making wiper, that shall also be going to bumper. You just have to pick that particular stock who are supplying to them. Okay, so it is called a proxy play. Then why should we, like, it is a question that why should we use to get this proxy players? So because they are already available at cheap valuation, and in that particular sector, like you can have a good like run up for a 2 to 3x percent, because Tata Motors will take huge amount of money and huge amount of time to get 2x return. But in return of that, suppose if a particular company such as Fiam or RSCL Gear Tech, it will like double the money in quarter of results over there. So okay, so we are on this. So just I want to have a look of yours on this quarterly results. See, in 2020 March, the company has posted 305 crore sales. In this is the quarter where Corona prevails in India, and after that, a company has constantly has a growth on this sales, and which is now 614 crores. So let me consider this as 300 crores. Let me consider this as 600 crores. So you can see that from 2020 to 2023, within 3 years or within 3.5 years, the sales of the company has almost got doubled, but the profit is like from 27 to 73, which is almost 3x. Okay, so there is no margin pressure on the particular company, as well as company's sales is growing continuously. So like this is a quarter on quarter result. Like each and every quarter, we will feel. So each quarter has like each year has 3 quarters: March, June, September, and December. So this is like 2020 year. This is 2021 year. This is 2022 year. This is 23. Like 2023 starting from March. Each quarter starts from March. Okay. So this is the year on year result, in which in 2012 a company was showing a profit of 53. Later on, after 2018, which was the peak time where the market makes the top, and from there 2020 market makes again a bottom, and then it shoots up. And now at 2020, the company is showing a constantly profit of 221 crores. So which is like almost 4x profit, which is within 10 years, I guess, to 11 years of the duration. So which is like a good results and good performance by the company. And like let's reveal the company name over here. So the company name is Action Construction Equipments. Yes, this is the proxy play for all the infrastructure players. See, if you have seen in any of the place where construction is happening, you have seen such type of cranes over here. Okay, such type of tractors over here. So here Ace company is the one which is dominating the market. It is not at all a big market leader in this space, but yeah, it is a company which has a strong management and growing constantly since years. 2020, 2023, it is showing a bumper result which is 4x of 2012, which is a massive result hike in the sales price as well as the profit. And the margin pressure is they are not at all facing any margin issues, and they are constantly showing a margin of between 10 to 12, which will be in the further slides. So this is the Action Construction Equipment, which has a strong results and strong, we have a strong conviction on this company. So like what actually this company is making to us. So this pick and carry crane, which has generally seen like heavy lifters, and this is the crane for like load carriers. Suppose transferring a load from one place to another. This is a tower cranes which is used to big buildings over here. Earth moving like black hole loader. They are having a big market over here also. This is a uh, big seller, like we can say that now a star candidate to make this company. Yeah, this is the one which is contributing major to the EBITDA of this company. The tractors, this is the agri equipments with like a farm. This is for farming and related purposes. These three are for infrastructure use. This is for farming related material. Okay, and they also have some more products which is not mentioned over here, which you can go to the website and you can see over there. Uh, here here on the debtors day, which we can actually see this, the debtor cash conversion cycle. See, what is cash conversion cycle? If a particular product in your inventory stays for a particular duration without without any interruption after it is completely made, or the money it is gone from there. Okay, so initially in 2012 a product stays or a money is blocked for a particular 70 days, but which has reduced to 9 days over here. Okay, so there is massive decrement, and that's why we can see that on quarter there is no fluctuation, because within 9 days there is a cash conversion cycle. So payments are made very frequently, therefore there is no margin pressure in this company. Like they are facing a very big margin pressure, but that is due to some Chinese player, which we will see in the cons of this company. Okay. Okay, so there are like, let's see the shareholding patterns. So promoters has almost 66%, which is a good percentage. Since 2020, they have diluted some of the part of it, but that's not an issue because a company has a strong promoter holdings over there, which is 66%, not at all very bad. Massachusetts Institute of Technology has already purchased 3.3% is, and in like DIS, which long-term equity funds and other funds has also been gathering about 3.54%, and the public shareholding is like about 24%. So the main point, key point over is promoter is holding a major stake on this, and they are having a strong build base for this. And okay, so let's see the client. Who are the clients and whom this is supplying to products to? So that is one Adani. The major industries I'm focusing on is KEA industry, Jindal. You can see like every company they are supplying. Airtel, Ambuja Cement, Berger Paints, Bosch, DLF, Cadila, Dabur, Alembic Pharma, Ultratech Cement, J Kumar, Acer, Havels. Name the company they are supplying, each and every company, and each and every company ACC, again Adani Group. And later on, if we can see that they are providing to Exide industry, one of the battery making industry. Then we can see KRBL, Foodworks, Domino's over here, and Gulf Oil Company, Idea, networking part like network and Vodafone related to that. The merger has been happening now. India Bulls real estate part, a strong buyer, I guess. HP, JBM Autos, Jamna Autos, uh, Moex, and Jubilant Life Science. Other clients are Tata Motors, Suzlon, Vodafone, BHEL, Delhi Metro, Siemens, Reliance Power, R Power, 14 rupees, Honeywell, Skipper, Sun Pharma, Supreme Industry, shoes making industry, then Uflex, packaging industry. Okay, this shade is very much important because many good players are over here. Indian Oil, NHPC, ONGC, Highway, RITS, SAIL, HP, Hindustan Aeronauticals, a share which is running very good. This I guess IRCTC or something like that. IRCTC is also there in this. So yeah, you can see that all like Indian ministry, you can see many good companies like they are supplying to many good clients, and they have a very strong holdings like tie-ups with the other companies. So like it is not, if a company is only stuck to a particular client, suppose there is one company Moltech Packaging, they have a very strong hands on Asian Paints. 55% of the whole company or whole company revenue is coming from Asian Paint. But that is not a good thing, because if there is something relation issue with Asian Paint, then there should be an issue with the margin, or they will see some for some particular duration of time they will see a high pressure on the margin. But this company having a strong tie with many of the other companies, so suppose if there is a relationship goes wrong with some of the other company, then they will don't see any further margin suppression on that particular sector over. Okay, Indian Navy is also there. Fine. So Uh, so like this is the story about what they are actually doing and what the clients are. Now let me show that what they are actually doing and what they have in your mind and what are the visions of the promoters of this company. Okay, so Saurabh Agarwal, one of the management faculty in that company, and they are having about growing at a good rate. In the conference call, it is mentioned that the crane segment, which is having a good growth rate of 20 to 25%, which is very good. Tower cranes, which is going even faster and which is 35 to 40%. And the bigger cranes are obviously we are building our capacities now and bring new products to Indian market. So yeah, there is one more capex they are doing over here, and they are bringing new products to the Indian system, which is purely built in or manufactured in India. And like there is a very huge margin for the Chinese player over here. They are supplying cranes to as a very cheap rate to the India, but this is the company which is focusing on that part also, and they are tackling and they are constantly making margin through this only. So see, in the last year, the construction equipment margin has been grown to 25%, which is approximately in the last year. And because of focusing on now construction equipment is additional growth to the business of that of this company. And the other capex which you have mentioned over here is they are also building one electric crane which they are going to launch in the market within 3 or 4 months, like commercialize it. And the testing cycle and the testing phase has already been completed, and the capex has already been done. So they are expecting that in quarter 2 they will commercialize it. And they are also seeing that they are enhancing the capacity in crawlers and crane business, which is like they are making high tonnage cranes and they are increasing the capacity. So what is the use of this information over here? If a company is doing capacity or capex, capacity expansion or capex expansion, it means that in future the average sales price will also increase, and if the margin remains a constant, then profit will also increase. So the market also has to give a higher valuation to this company as well. So now let's see that who are the competitors of this company. JCB, which is a big competitor, which is just in the tractor field, okay, and Escorts, which is a competition, which is in the crane field over here. But although they have a good competitors over here, they have showing constantly increase in profit as well as in sales number, which is just because of the strong management and the strong teaming power over this company. So yeah, let's discuss what is the pros of this company. The company has a good profit over like CAGR of 27.2% for the last 5 years, which is fantastic profit percentage over here. Company has a good strong management. The debtors days has been increased from 45.9 to 28.6 days. OPM, operating profit margin, is sustainable, which is just because they are doing a capacity expansion, and I'm pretty sure that this company will perform good due to the capex which they are doing in India. Strong management outlook, like in the last conference call, management was so strong about their upcoming results that they are going to do a very good quarter in the next upcoming years. FIS has constantly increased their holdings in this company. They have a strong order book, and they have a good client base over here. Okay, there is only some cons in this company. Okay, just a second. Okay, they are having some cons in this company, and they have a strong competitors, but due to the strong management, they will compete this, and like they will perform good. uh, Good results has been posted. Like suppose if a company has already posted a good result over here, then it is sometimes believed that if a company puts a flattish result or some low result, then they will expect some downfall to this share price. But I think we don't, if we are a long term investor, we don't have to think about it. We just have to invest in it, we just have to forward it, because company on this quarter or later on quarter, company has to perform well. If you have a strong conviction, then you can do this. Good result has been posted already, which can be a pros also, but I have put it in the cons part because like company has shown a very good result, and market is expecting more from this company, so that's why. Okay, so if you like this video, do share and subscribe to this channel. And like we will try to make this similar types of video in the next upcoming week. In each week we are trying to make 1 or 2 videos, and we will briefly describe like how these companies are performing and what all opportunities will be there in an upcoming market segment. And it is just that like don't try to put money directly and just think over it. We are just putting a light on how the industry is and how they will going to perform in upcoming years. So this is just a study related videos. Thank you.